Thank you for joining us at the Queensland FBAA Landscape and Focus Series for 2020. Today is the commencement of Reconciliation Week. Today is National Sorry Day, or a day of healing. Today is a day that we also remember the stolen generation. These have been challenging times. So it's really important that we continue to support each other. It's also important that we can provide you with vital industry updates. And since we're not able to continue with our traditional PD summits, like you, we have also gone digital. So let's get things underway. Now, firstly, you will receive 1 CPD point for attending today's summit. Just look out for your email. I'd also like to take this opportunity to thank our national sponsors. Without our national sponsors, these events simply do not take place. Now, with the footy season about to kick off, it's not too late to also register with Finstro's tipping footing competition. It's a little bit of fun, and why not, given that we are in still a semi-lockdown. Both the Rugby League and Aussie rules will each have their own competition, and you could go in to win some cash. There's no cost involved, so please reach out to Mark Anderson from Finstro, and he'll get you on your way. I'd also like to let everyone know that you can also download the contact details of all of our sponsors via GoWebinar. Now, at the FBAA, like you, we love referrals. So if you refer a new member to us, you will also receive 10% discount off your membership. So please consider us with a new referral. If you haven't already, we have a great app, which is the FBAA app. You can also download this very easily and get all the content and up and coming webinars as well, or any industry events that we're hosting. Please also don't forget to visit our website. Now, our website has a rich amount of resources and tools that are fantastic for your business. So I encourage you to visit our website and go to the members area. We recently launched our broker support program. Now, here you'll find some measures that will assist you also as we go through COVID-19 and beyond. You'll also be able to find the agenda on the Go webinar for you to download for today. It's now my pleasure to introduce our first guest, Robbie Fiddler, National Sales Channel Manager from On Deck. And Robbie will be talking around helping SME customers. Robbie, welcome.
Thank you. Thanks very much, everybody. Just share the screen there. Beauty. All right, for anyone that doesn't know me, I'm obviously Robbie. I'm the National Channel Manager for On Deck, and I'm having an issue with my screen there. Is it? No, we're up. Okay, cool. Look after our broker channel across Australia. Today I'll be talking you through how you can help your small business clients overcome some of the biggest challenges that they're facing at the moment. We'll kick off by just basically covering a bit of the history of banking and brokers in Australia. Through the 70s, banks, really ruled supreme. During the 80s, finance and banking system actually become regulated. Branches, sort of began to close and brokers emerged throughout the 1990s. And, in the early 2000s, the third-party loan originations, through the broker channel reached around 18 to 20%. If you look forward to today in 2020, the sentiment around fintechs and the SME sort of client consideration of the alternate lenders that are available in Australia, are really at an all-time high. We've come from really humble beginnings, and On Deck as a group globally has now lent it's actually over $15 billion to around about 110,000 small businesses across the US, Canada, and Australia. And now you throw into the mix COVID-19, we're sort of facing the biggest challenge of all, not only as a broker channel, but also supporting small businesses. So some of the trends in Australia, for most of you, you would have known that OnDeck has recently done a research piece on the effect of COVID-19 on small businesses. And the findings from this latest research that we conducted in April 2020 highlight some of the challenges that your clients are facing today, irrespective of the current COVID-19 situation. The clients that you love are not being loved by the big banks, and in a lot of cases are not even being looked after at all. So they're basically being knocked back for finance, and this really does present a fantastic opportunity for you as a broker. So 1 in 4 SME owners plan to seek additional finance in the future. It's actually a figure that raises to above 53% of SMEs with 6 to 10 employees, and around about 58% of those with 11 to 49 employees. 38% of SMEs in operation less than 5 years have been knocked back for finance by their bank. 1 in 2 SMEs rejected by a bank have turned to family, friends, or even credit cards for funding. And I guess probably, the last point there, 27% of SMEs have secured bank finance, have actually reported that, it was negatively impacting their business and trade operations, literally just waiting for the bank to come up with an approval for them. So obviously there's a fair amount of opportunity there for the broker channel and, to support your small business clients. So moving so COVID-19 is the biggest challenge of all really for a small business at the moment. 8 in 10 SMEs have already been impacted by COVID-19, with 4 in 10 stating that this has had a severe impact on their business. 92% of small business owners expect to be impacted by COVID-19 in the future. 1 in 2 SMEs say they've experienced a loss of revenue as a result of COVID-19. And 57% of small business owners say that access to cash flow will help their businesses be better prepared to weather the storm of COVID-19. At the moment, we sort of really work in a couple of really focused industries. It would be sort of, silly to look at all small businesses as being not affected. When we look across the board, we can see that, unfortunately, a lot of people have been physically impacted. So there's a few focus industries that are shown there on the screen. And, the most common thing that we're seeing at the moment in terms of opportunities for people actually looking for funds, they're either looking to hire staff, invest in equipment, buy tools, run marketing campaigns or initiatives, build websites, expand their premises, purchasing stock or restocking now that businesses are beginning to reopen, updating technology so they can access delivery type services and that type of thing. So yeah, there's still a lot of opportunities, and I guess when you look forward to the looming sort of tax period that we've got ahead of us, 30th of June, there's going to be people looking to actually use funds to meet their tax obligations. There's a couple of scenarios here. We've done takeout restaurant recently. They're actually closed in terms of their retail business at the moment. 6 years in business, a credit score of 800, above 800, 1.5 mil in terms of their revenue. And you can see there, what the offer was. What we're finding a lot of restaurants are doing is, while their actual seating facilities are closed, they're actually deciding to renovate, ready for when they're reopening their businesses. And jump to the next slide. We have seen a lot of people doing renovations at home. Here's another small example: plumbing business, doing some marketing and inventory, time in business 9 years, credit score of 700 or more, 590 K in terms of annual turnover, requested 55 over 6 months. They were approved for 55 over 12. And, you know, a fairly substantial commission there paid at 2,200 plus GST. So what can we do in terms of helping you reach your audience? OnDeck's prepared some ready-made marketing assets, which you can reach at ondeck.com.au/partner-resources. You know, there's some product parameters in there, and there's actually a range of send-ready EDM templates, which can be completely white-labeled for your customers for you to send out. Doesn't need to say anything about us, just so that you can obviously show that you're trying to support those businesses that are in your existing database. You know, we've even done a COVID-19 sort of related information support slash EDM that's there. It's not about selling, it's more about giving your business owners tips and tricks and things like that on how to survive the coming months. And we've also set up a COVID-19 resource hub. So if you jump on there, you can find insights that you can share with your clients. It's got information about government funding options, some practical tips on managing their businesses through some uncertain times, some other resources from, you know, obviously trusted sources that are worth sharing, and some actually really inspiring stories from other small business owners, you know, that have really diversified and switched up their businesses over the last couple of months to survive COVID-19. So in summary, you know, we've got more than 2 million small businesses in Australia. Each of them have got their own individual struggles. There's so many ways that you can help a small business with their finance challenges, and it really does come to a point at the moment where, you know, you can be a subject matter expert in supporting small businesses through these times. You know, fintech and non-bank lenders are constantly offering new solutions for small business. And, you know, you can really partner with a small business lender who will help you, but also help your clients through this critical time. But yeah, that's it from me. Look, if you've got any questions or any scenarios that you'd like to work through, yeah, please feel free to reach out to myself or one of the team. You've obviously got all of our contact details shared with you today from Mariah and the team at the FBAA. But yeah, thank you very much for taking the time to tune in, and wishing you all the best through a challenging time.
Great, thanks Robbie, and thanks for sharing some of those fantastic examples about how OnDeck's helping many SME customers, so thank you. So we're now going to hear from WAMC, Insurance Advisor Net, and Pepper and Suncorp.
Conducted by our experienced industry trainers to make learning interactive and enjoyable. These classes are not webinars, so you have the opportunity to ask questions and discuss topics with our trainers and other students. Sessions are available for those seeking to complete their finance broking qualification. We are also running complimentary 3-hour recognition of prior learning classes to assist existing bankers and brokers to gain their qualification more seamlessly. Take the opportunity to upgrade to your diploma starting today. Register your interest via the virtual classroom banner found on our website.
Hello everyone, this is Darren Lodes from Insurance Advisor Net. Just touching base with you all. I hope you're all keeping well through these crazy times that we're all going through. Just a quick grab, the one bit of advice I'd give you in the time that I've got is for those that have got their policies due this month, and I know there's quite a lot of you, maybe this year's the year to take advantage of our premium funding option where you can space the payments out over 10 months rather than an upfront payment, just to help you cash flow through these times. Any other problems at all, you guys know where to get us, and we're here to help you where we can. Stay well and we'll get through this together. Cheers.
Hi, Aaron Milburn from Pepper Money, here to say a huge thank you to FBAA members. Throughout these really trying times over the last couple of months, we've partnered together to make sure your customers are supported throughout. FBAA members have been critical to the success and growth of Pepper Money across Australia, and I want to say thank you for that and wish you all the very best in 2020 and into 2021 together.
These times are strange, like never before. So we're all doing our part. We're staying indoors. Our schools are different, the classrooms are quiet, but learning's still happening if you know where to find it. We're quick to adapt, we're moving online, but we have to be careful to leave no one behind. To keep kids connected and moving ahead, we're giving them access to the internet. Suncorp is providing $1 million to the Smith family to support online learning at home. Visit thesmithfamily.com.au to learn more. That's the Suncorp spirit.
Please ensure to reach out direct to WAMC, Insurance Advisor Net, Pepper, and also Suncorp. It's now my pleasure to introduce Peter White, FBAA Managing Director. And Pete will be talking about where do you stand today in 2020. Hi, Pete, and thank you. Welcome.
Hey, Chris, and thanks very much. And g'day, everybody. Trust you're keeping well. And sorry for a little bit of technical issues back there. It always happens, doesn't it? There's always something there. We soldier on. So this afternoon, where am I at? This afternoon in the series that we're running across the country on our 2020 Landscape in Focus, I want to have a little chat to you about where we're at with regulation and what else is happening in the marketplace. There's an interesting saying by Woodrow Wilson that says, the only use of an obstacle is for it to be overcome. And you would think with all that we've been through last year, where we fought and won against the Royal Commission, the unwinnable federal election went in our favour, regardless of where you sit in politics. It was good for us that the Liberal Party remained in government, and that protected our commissions for the time being anyhow. And we got a change on the financial abuse declarations by the ABA into being confirmations. Obviously, the declarations at the time were something we couldn't sign. And so we thought we'd gotten past all that, and the obstacles were behind us. But of course, then came 2020 with bushfires, floods, volcanoes erupting off New Zealand, earthquakes, and of course, the current COVID-19 process. And there's always something that's thrown at challenges at us. And once again, we continue to stand and rise to those challenges going forward. But with all of that, there's no time for complacencies. There's still a lot more work to be done in the marketplace and within industry. And of course, a lot of it still revolves around this and getting past what was the recommendations of the Royal Commission as they impact industry. I'm not going to bore you with too much on this, but I will give you a quick update on where things are at. So the elephant in the room, of course, is best interest duty. And we've seen with best interest duty that ASIC has come out and said that the implementation is being deferred until 1 January 2021. And of course, there was a bit of a blood rush in the media the other week with all this, thinking that the Treasurer had announced this. He hadn't. The Treasurer is making announcements on things that hadn't been passed through legislation. And of course, our best interest duty did just prior before Christmas. So it didn't include that. But ASIC turned around and mirrored the time frame that the Treasurer was talking about. So it's 1 January 2021 for best interest duty to be implemented within your business and take effect at that time. And between now and then, I'm sure if not already, your aggregator will be starting training sessions around best interest duty and the practical application of that within your business. The actual regulation guide, the RG, isn't out yet. And ASIC have advised that the RG will be out at around the middle of this year, which is virtually on our doorstep. I went back to ASIC and asked for greater clarification of that. Are they talking June, July, August? What are they talking about? And the response was at this stage The date is not defined, but they're still aiming for mid-year with plenty of time for education and training before implementation. So I am expecting this to be out somewhere in July at this stage. And we're planning through the FBAA in August, we will be launching what we're calling at the moment the 101 Best Practice Guide for implementation of the Best Interest Duty in your business. Bit of a wordy title. I'm sure I can work on cutting that down. But basically, it's a 101 guide for implementation of best interest in your business, it doesn't override what an aggregator is doing. In actual fact, it complements. This is a higher level guide to understand the intent of law and the intent of what a best interest duty is about and how that applies in your business. And your aggregator will give you the details as to how they want you to meet those requirements and obligations. And as we release that guide in August, we'll then also be conducting a series of training seminars around the country. And at this stage, it will have to be via webinar. If the rules have relaxed on cross-border commutes and so on, we'll be doing them more face-to-face. But for now, we'll tag them as being webinars to go further into that and to put some more meat on the bone, if you like, around what those obligations are looking like in their implementation. So that will then set everybody up very nicely by well before the time we get to January to implement the best interest duty, knowing of course that brokers all around the country put their clients first anyhow, but we need to understand what these regulations look like so we don't inadvertently trip over the wire in trying to comply to them. And on that note, one of the major things that is constantly repeated to me by the regulators is that compliance with a best interest duty is going to largely revolve around your documentation. So the key for this and for compliance is document, document, document. And that will be the best way to mitigate anybody who tries to take you to Africa or argue the case you didn't act in their best interest. Documentation will be king. And how that looks, again, that'll be back to your aggregator. The other piece of regulation moving on, of course, is the commentary around clawbacks, something that's very dear to all our hearts, especially mine, because for donkey's years, I reckon that clawbacks should be abolished from this industry. And they're only brought about by the past government when they banned exit fees. And that had a cause and effect back to brokers for having clawbacks implemented against their upfronts. I am vehemently against it. And our fight, if you like, or our position on clawbacks isn't over. I'm currently working with an international research house to do a piece around this to create a data set to give back to government to further argue why clawbacks should not exist in our industry for those people who are meeting their obligations under a best interest duty. If you breach your agreement, if you commit fraud or do something dumb like that, well, then you're going to own it. We all own our sins as such. But if you've done the right thing, you've done your job, and there's no way you should be penalised for that. So we are working to ensure that we do everything possible and leave no stone unturned in doing our best in getting rid of clawbacks in this industry when you're doing the right thing. The other piece in there is the 3-year review. It's going to happen. We're now only a couple of years out from that. We do have government's word that that will be done with the intent to ensure the model is operating appropriately. If it's not and needs tweaking, then it gets tweaked. If it's all good, we leave it alone and move on. If it's rotten to the core for some reason, then we've got problems and we've got another review coming on. But I expect that in the next 6 to 12 months, we'll be starting to work closer with government as we narrow in on that review period. The other piece I call is the duck syndrome, and that's regulatory framework aligning. We can't allow that to happen. If we want to all be under an FSRA as financial planners, then we shouldn't worry about this. We just let it go. But we don't want that to happen, and we want to ensure that we keep our patch of turf as such. And therefore, you can't have planners acting as brokers. They're different skill sets. They're different regulations to understand. And the more the two come together and align, the more they look the same. So we need to keep them separated for the future of our industry. And for now, that's standing on fairly firm ground. with increased obligations on ACLs and broker misconduct reporting, those things are progressing with ASIC. The combined industry forum is working quite a fair bit with those, with the lenders as well as the with the regulator and the aggregators. That will play out over the coming time. The exact timeframes for implementation aren't known at this stage. And for those of you in the motor game, recommendation 1.7 on the removal of point of sale exemptions, that's one of the things that's on the back burner. And I dare say as we get into 2021, those things will start and take a heightened focus. And the other things that we've still got is conflicted remuneration, which is bundled up with the best interest duty. And we'll get further definition on that as we get closer, but providedly that's been done. That's all around soft dollar commissions and volume bonuses. Industry's already dealt with that. And what's left to remain is the reg trip piece that sits around it. There will be increased governances coming out through the regulator onto ACLs, and that obligation pushed down to the brokers. But the data on these things for the increased governance will come from the lenders. So again, the combined industry forum is working very closely with the banks and the aggregators to ensure the amount of data is appropriately received. The other piece there is the unique identifiers, and that's, if you like, an overrun or an overlap on your ACL and ACR numbers, but is designed in principle to cover everyone in the lending industry, bankers as well, so that if they get into our industry or they're dealing with a consumer client, they have a number that tracks with them and stays with them regardless of their movements in the future. So it's a part and parcel of some of the pieces being looked at. It's certainly not on the top of the list at the moment. And there's always more, isn't there? So we've got RG 209, as we know, that came out the back end of last year. That's probably well done and dusted. But the important thing to remember with responsible lending, with the information that came out from ASIC last year, was that they actually didn't change anything. What they tried to do is to give greater clarification to what RG 209 was about. There is further work being done already on reverse mortgages and the education piece for that. That will be rolled out as a part of the obligations coming out from conflicts and people taking abuse of elders, or what they call elder abuse is the right terminology, in regards to reverse mortgages and other forms of lending. These all have taken a heightened focus, and there's a special education piece coming out around that that we will be launching, and we've been spearheading the discussions and also the modelling in conjunction with ASIC. And lastly there's DDOs, design and distribution obligations. That's really focused at the lender, but a part of our obligations through responsible lending and best interest duty is to ensure that the design and the distribution of product is not unsuitable for a client's needs. So those are pieces of work that are still ongoing, together with the meetings that are still happening. And even in the COVID period, meetings with the Coalition and Labor Party continue via Zoom and other electronic platforms. Actually, in fact, I think I've had more meetings in the last 7 weeks or 8 weeks after being in lockdown that I normally have in a 6-month period. So the activity there is quite strong, and the engagements are very good. And obviously, there's a very strong focus on supporting small business as well as you know, the economy and people's health. The last part there is a piece that we're doing with ASIC on enforceable industry codes. It's something that was in the Royal Commission's recommendations, and it is a piece whereby industry association codes of conduct are looking to be able to be made enforceable by ASIC. And again, another piece of work that's not necessarily high on the agenda, but it is probably getting close to the top in its focus. That's another piece of work that we're running around with at the moment as well. And as I've said many times in the presentations that I've conducted, it's not about waiting for the storm to pass, it's about learning to dance in the rain. And I tell you what, that storm is certainly hanging around, especially if you're in WA at the moment, not here in Queensland, it's all okay. But you know, it's all a matter of learning how to dance in the rain and being able to deal with these things that they come about, and ensuring that we meet our compliance obligations and not falling foul of laws as they come through. And a part of doing that is not just those things I've mentioned that we're still working on with our regulators, it's also the other pieces that we do through the IMBF in regards to being across international marketplaces, because our regulators are constantly talking cross borders. We're regularly compared to Canada. We're always looking at the UK and shaping regulation. We had the Netherlands come at us through the Royal Commission, and all these countries are connected to us through the IMBF, and it's very important conversations where we can assist each other and learn and understand the pros and cons of what happens in their marketplace and how they shape and impact our regulations here in Australia. And on that, if you haven't already, make sure you register for Q&A with Whitey, that's me, tomorrow at 11:30. You'll see the marketing material on social media or through your email. We're talking with the Canadian Association, because it was between myself and Samantha Gale from Canada who established the IMBF, and we're going to have a talk about what's happening in those markets around the world and how they're impacting us and impacting them. It's going to be a very, very interesting conversation. But it's also why we are part of the Small Business Association. We have about, well over 19,000 odd brokers in this country, and they're all small businesses. So it's important we're abreast of everything that's happening there, and I sit on their advisory board for that purpose, as well as our ambassadorship for mental health awareness within this country, which we started back in 2016. Very important that it's all well and good for us to look after credit and policy and regulation and government and politics, all that sort of garbage. We got to do that every day of the week, but your mental health and your physical health are all important as well. So we're here to make sure that we do what we can to assist you to have a healthy mind and a healthy body, because that's important for your success in business as well. That is also why my wife and I set up our charity, the Sanity Space Foundation. And as far as this industry is concerned, it's there to reach out to around 10,000 families in the financial services sector, and that's across all financial services, not broking, who have special needs children in their family. And we're here to help with their mental health. We have support groups for them, and also a bit of financial hardships for them as well. So these things all help us to dance in the rain whilst these storms keep brewing, in addition to everything else we do. And it's always critically important to be aware of what's around us, but it's not for us to focus on. What we need to do is to focus on our future. And I must admit, I never planned to be doing what I do today. It's not my job or career, it's my journey. When I was a kid, I had a pilot's license. I could fly planes before I could drive a car. And my career was to be a commercial pilot. And a mate of mine who I was doing this with at the time, he went on to his career and had a very successful career as a commercial pilot and wound up flying the A380s with Emirates around the world. But that wasn't my journey. My journey went on a different path. And it's important to understand that your future is your journey to travel. And it's important you focus on that and focus on your journey and travel the path that it takes you on. It may not be what you expect, but it's important. That's where your focus is. Don't worry about what's going on behind you. Don't worry about all the clutter and noise that's around you and regulation, all that stuff. Focus on your journey. It's an important path you need to travel. And of course, no one said it was going to be easy, but it would be worthwhile. I must admit, I can't say my journey's always been easy. It's been full of its challenges, let me assure you, but it certainly has been worthwhile. So I encourage you to focus on your journey, keep moving forward. And on that, before I wrap up for today, I want to talk briefly about the FBAA's Broker Support Program, which Christine touched on briefly at the beginning of today's seminar. And this is something we brought out to help you through COVID-19. And what it is a whole lot of benefits for you to assist you in your day-to-day operation of your business. So we've put in a membership fee program payment. So it's a program whereby you can pay your payments over a period of time, and it enables you to cash flow your payments a bit better, or your annual membership fee a bit better. It's just a means of a bit of assistance. The life isn't great for all of us, so if you need it, we're there to help. We also put a freeze on membership reviews. We, as an association, we review our membership fees every year. Doesn't mean they change every year, but they go for an annual review. I think our accountant was getting a little bit ahead of himself, thinking, oh, good, we'll look at a fee increase for members this year. No, can that one. So that's gone in the bin, and we're not even going to think about it till we get past July 2021. And that doesn't mean that membership fees will change, but any review won't happen until after that time. We also started a campaign called Call Your Broker. There's a whole lot of collateral on our website. It's free. It's within, you go off the homepage to get it. And it gives you a whole lot of social media collateral that you can put out to your client base as various commentaries around how they can, or why they should be speaking to you as their broker for certain needs that they might have. There are free blog content you can download. There are free videos you can download, and these are all for you to use to your client base. So have a look at that. And as well as in there, there are all the links to the government websites and information in regards to what's in the government stimulus packages as well. So everything's there consolidated in one easy spot for you to find. As well as information on my weekly Q&A session, information there as well, together with some new educational opportunities that are available too as well. If you've got some spare time, might be a good time if you haven't done it to look at possibly doing your diploma. You don't have to, but you might want to, or you might be looking at time management training courses that you can do. A whole host of things that are available there, not just directly on lending or Cert 4s and diplomas and that sort of stuff. So have a look, and hopefully there'll be some things there that'll be of assistance for you. As I mentioned too, a part of that is all the information on the stimulus. As you can see, all the list of different things that are there to help you in regards to any queries, concerns, or assistance you may also want, because these things are available for you too if you qualify, as well as potentially for your customers. Or you may have customers who are going through these things and are trying to find a bit of information as well. All that information is there for you. A part of the things you'll see when we're promoting this are signs and banners like this in regards to COVID-19 and what our broker support program is about. So when you see that, you now know what it's to do with, as well as this sort of information on social media, and of course the Q&A with Whitey. And yeah, again, make sure you log in on that. It's every Thursday, 11:30, and tomorrow we're talking about international markets and their impact here in Australia. And of course, on your mental health side of things, make sure you continue to have that conversation. It's in these sort of times, it's more important than ever that you reach out to one another and talk to one another on a regular basis, and do that. You know, my preference is to do it visually these days. So whether it's FaceTime or through Zoom or what other visual medium, don't just pick up the phone and ring. Actually, pick up the phone and or get onto a video platform so you can actually see who you're talking to. It's a great way to work with each other. And unfortunately, slide needs to be updated. Last week we had a magnificent workshop with Chelsea on mental health from Chelsea Pottinger from EQ Minds. We'll possibly be looking at running that again, but there's information available through our website and also EQ Minds on various things that are available to you to look after your mental health. That's about it from me, but I do have a question here. Let me just apologise, I'm looking at my phone. And I have a question that they've asked me, and I apologise, I'm just going to read this as is. The Big Four appear to be starting their yes reply to loan inquiries again, despite asking a few questions. The client then goes direct and is declined. Can this questionable practice be questioned? So I'm not quite sure what the interpretation of that is, so I may get this a bit wrong, but there is a bit of a battle between the banks of past where brokers have declined loans and they go direct to the branch and they get approved. My understanding is APRA is looking at that. I believe ASIC is as well, to put an end to that practice, because that's obviously not appropriate and not obviously doesn't meet issues, especially around responsible lending and acting in the best interest of a client. And I guess on that point, that's one of the big things as we go forward with a best interest duty, is to remember that to me, it's one of the greatest selling points brokers will ever have. And that is that not only have I always acted in your best interest, Mr. or Mrs. Client, I now have a piece of law around me that makes sure and insists that I put your interests ahead of mine, which I will always do. But if we walk into the bank, the bank's not under that obligation. So there's no legal premise for them to act under the same obligations as I am. So the best interest duty is a big upside for where we're going. And I think it's something to keep very much in focus and keep moving forward and focused on our journey. So that's it from me. And I want to thank Christine for having us today. Appreciate the time. And I look forward to seeing all of you very soon that we get back into face-to-face mode. So thanks very much, everyone. And back to you, Christine.
Great, thanks Pete, and thanks for your great update. And so look, if anyone has any additional questions, you can continue to put it through the inbox there, or otherwise Pete will also address them tomorrow at his Q&A. So thanks again, Pete. That was great, thank you. We're now going to hear from Bluestone, Stride Financial, Finstro and Trailbook Loans.
Sarah is a florist. Khalil runs his own business consultancy. And Daniel and Rita own 15 coffee shops across the country. But when they applied for home loans, they were all rejected by the big banks. 58% of Bluestone's borrowers are self-employed. Unlike banks, we take the time to get to know our customers' unique circumstances and accept a variety of supporting documents when verifying income. So for your self-employed customers, turn to Bluestone. bluestone.com.au.
G'day legends, hope you're living the dream/nightmare in these uncertain times. Stride Financial coming to you live from isolation. Best thing about ISO, Dad's home more. Worst thing about ISO, Dad's home more.
Listen here champ, you're not in charge yet. On a serious note guys, Stride Financial, we're here to help. We got through the GFC by lending responsibly and maintaining our relationships with our brokers and our clients. And this time will be no different. Phil Joyce once told me, in times of uncertainty, focus on controlling the controllables.
That's pretty professional from you, Dad, considering you don't have pants on. Stay safe, everyone.
And look after each other, and we'll all come through this together.
So be sure to reach out to Bluestone, Stride Financial and Trailbook Loans. It's now my pleasure to introduce Kerry Sansbury, Business Development Manager for Credit Fix Solutions. Welcome, Kerry, and over to you.
Thanks, Christine. Thank you very much. Just sharing my screen quickly. Okay. Hi, everybody. Thank you very much for this opportunity to the FBAA. Thank you, Christine, Mariah, and Peter, for all your hard work. I know a lot of work goes into this. It's very different, I guess, now presenting online, but it just is. It's great that we can all sort of work together and make this still happen. So Credit Fix Solutions, I have been with Victoria Costa, our CEO, for nearly a year now. A bit of background on me and how I came about working for Credit Fix Solutions. I worked for a specialist lender about 4 years ago, and I had a friend that came to me and wanted to become a mortgage broker. Now, normally working for a specialist lender, I would suggest a mortgage with defaults would go in as a higher rate, but because he wanted to be a mortgage broker, I had to work out what to do a bit differently. So I spoke to a competitor. He had 3 defaults. This friend, I spoke to a competitor, and it was $10,000 up front to remove his defaults for him to become a mortgage broker. I spoke around to other mortgage brokers, as you do in this industry, and Victoria Costa was $990 per default, and she only charged on result, so nothing up front, no result, no fee is our business model. And then we removed all the defaults and he became a mortgage broker, and that's how I guess I became Victoria's first BDM. Victoria's been around for about 8 years. I was the first BDM. We've now got 4 BDMs in our business. That's a bit about us and our products. Now I'll just get into this presentation. Wait a second. That works. There you go. Okay, great. Okay, so today I just wanted to not talk about so much about our products, but more our credit reporting top tips. We've quite fast become the educators in credit reporting, not just credit repair, credit reporting as well. Big changes, as we know, in March 2014, credit reporting became positive as opposed to negative. So negative was basically just your personal information, and your negative information was stored on your credit report, whereas now we've got positive credit reporting coming in. So that's basically every debt that you have, which is your credit card, your car loan, your mortgage, is now reported on your credit report for the last 24 months. Now that's my little disclaimer. We do have a credit fix lawyer company that does back us as well, and we do offer free advice with this as well. 8 key ways we can help your business and your clients. No result, no fee credit report repair. So I've touched on that before. One-on-one free expert consultations, fast and thorough investigations, no chasing required, increase your conversion rates, add a passive income stream. We do offer a commission for brokers. I know that that's not a huge reason to use us. We offer a $110 commission, but it's more the journey, I guess, for you. I mean, if we can remove these defaults, these customers become a mainstream customer at 3% instead of a 7% range. So it's not so much the income stream, it's what we can do, I guess, the journey for a home loan we can offer for you. And educate your clients for free as well on credit reports. So we're always giving advice as well. Okay, so here we've got understanding your credit score. So we've got a credit score here of 441. We've got the negative data on the left, as you can see, and you've got the VITA score 1.1. And now a lot of the lenders are starting to use VITA score 1.1, not just the credit score. The VITA score 1.1 is actually the predicted credit score for the next 12 months, and that depends on the algorithms in the background, the type of finance, the amount of finance, all different scenarios. But I've seen a lot of brokers where the credit score might be 550, 600, which is what you need for a credit score, scoring lender, and the VITA score 1.1 is down to, say, 450, where it really can be an instant decline because of that credit score. So really bear in mind the VITA score 1.1 when you're doing credit reports. I'm not sure if all brokers are doing credit reports up front. The conversations I have with brokers now is that with RHI, anyone can have surprises, and it might take an extra 5 minutes to do credit reports up front. It may just save you a deal. For example, where the VITA score 1.1 is lower than the actual VITA score, 5 minutes due diligence might help you there. The negative data score is where the positive credit reporting hasn't come into play, so it's just your defaults and anything negative there, and then the positive credit score is up the top. So for example, if these customers have got a fantastic RHI, so they've been paying all their bills on time for the last 24 months, the positive credit score up the top on the left there will actually be a lot higher than the negative data. And I guess that's where positive credit reporting is actually positive. One, because you can see all the debts now, so there's nothing undisclosed for you. And two, if your customers are paying everything on time, that credit score actually increases. Okay, so this is the RHI that we discussed before. So in this regard, we've got 1, 2, and some 3s. So this specific customer has gone 60 to 89 days overdue. Now we can fix RHI, so make sure when you are doing your credit reports up front that we're asking the questions to the customers, because sometimes there are errors. It is a system, it is a new system, CCR, so the errors can occur. If the customer has reported that that they're going to be behind and they've gone into hardship, then the credit provider can't actually report this. So we do find errors, and again, the customer can ring up and get this amended, or we can do that for a small fee as well. What can and can't be fixed on a credit report: unfair defaults and court actions, incorrect RHI, duplicate inquiries, incorrect personal information, and fraudulent applications. 95% is our success rate. How we do remove these defaults is through errors and loopholes in the credit reporting legislation and Privacy Act and compassionate grounds. I have a lot of brokers ask me if these defaults need to be paid or unpaid. They don't. Morally, we might want to have this conversation and make sure these defaults are settled. However, we're looking at errors and loopholes in the legislation to remove it. Bankruptcies, ASIC entries, we can't remove. Okay, so I've just put in 4 case studies to help you understand our service as a value add for your customer. Just a few examples, I guess, just to help you understand. So case study number 1, I've paid the debt, surely they must remove the default. Again, I mentioned before, the debt doesn't need to be removed just because they've paid it. Most likely, once the customer pays the debt, that default will remain, and it takes a professional like us to remove that default through errors and loopholes. They're quite tough on removing these defaults, as I'm sure you're all aware. Case study number 2, a smaller default is easier to remove than a larger default, i.e. energy defaults. A lot of brokers come to me and say it's just an energy default for $800. You know, will it take you a week to remove? Unfortunately, we've had $110,000 court actions over an energy default that's been removed quicker. It's all in the process. It takes us 40 days to get the 30 to 40 days to get the documents from that provider to then go through and find errors and loopholes. So whatever default it is, even if it's an energy default, unfortunately our time period is 2 to 8 weeks. Case study number 3, the debt is unpaid. The credit provider won't remove the default. Diana, unpaid $21,151. Okay, next one. So we've got basically just an example here of what we can do when we remove these defaults. So you can see here the credit score was 522. We've now removed the default, and the credit score is instantly lifted to 722. There's no history that default was on there, and the credit score instantly lifts as well. Also, just to mention as well, Afterpay, payday lenders, short-term lenders, please be please be wary to your customers, or try and educate your customers and referral partners that each Afterpay inquiry or each short-term lender, the credit score points for each inquiry is 150 points. So if you think about it on your credit score, we only have realistically 600 points every 6 years. We've got 1,200, but we need 600 for a good credit score to be able to get finance. So we only really have 600 for every 5 years. You do a few Afterpay inquiries, a few home loan inquiries, there's your credit score that's quite low. And I guess there isn't much education for this. I guess it's up to us. We've got ebooks and things like that. It's up to us to educate our customers and our referral partners on their credit score and their credit reports, and to show them how easily it is to access it. That's basically a good summary of what we do and how we can assist you. If you ever have any credit reporting inquiries, there's my details. Please don't be afraid to give me a call. Thank you.
Great, thanks, Kiri, and thanks for sharing all your updates and around the educational side of things too. That was fantastic. So thank you. Please make sure everyone that you reach out to Kiri and the team directly for more information. Now we're going to hear from ALI, Lend and Prosper.
As a broker, it's fantastic to partner with ALI. The product offering is incredibly simple. We can set up the policy online in a matter of minutes. Having a mortgage protection insurance policy is one of the most important things that someone can do.
We want to cover as many people as possible. We want to help them with their claims when they come up.
It's really nice to be able to combine making a difference and going to work.
Overall, I'd like to think that we do bring that additional dimension of care to the industry.
Just to thank ALI from the bottom of our hearts for just making it so much easier to just relax and get on with the process of recovery.
My name's Danelle Brooks and I'm the head of third party at Lend Capital. We're all working through a pretty interesting time coping with COVID-19 in our own businesses, in our friends and family, and in that of our clients. We're really excited to let you know that through the Lend platform, we're still writing loans for your clients, and there are still lenders out there who are offering money. The platform automates the process of matching a SME to a lender using a sophisticated combination of AI and analysis, and is actually smart enough to determine the client's serviceability as well. It's a single application, it's end-to-end deal flow, and we pass on the full commission to you at time of settlement. So reach out to us at Lend today. Stay safe, stay healthy, and stay sane. Thanks.
For decades, small businesses, who are the backbone of the Australian economy, have been struggling to get access to finance. So what we've done is we've created our own proprietary technology that looks at finding ways for them to get access to funding that they otherwise couldn't before. Our CDE, our credit decision engine, which we've built in-house here in Sydney, looks at over 450 data points in 15 seconds. There, we're able to lend them money in a really fast turnaround time. So traditionally within 24 hours, but I know of an example where we did it in 26 minutes.
Please ensure to reach out direct to ALI, Lend and Prosper. Well, that brings us to an end of Queensland Series 2 Focus Series. I'd like to take this opportunity again to thank all of our sponsors. Again, these events simply don't take place, so a very big thank you. Remember that you will also receive 1 CPD point, so just keep an eye out for an email from us, and in that email you'll also see that there's a little survey in there, so we'd really appreciate if you would give us the feedback from our webinar series. You can also have review any of our previous eSummits. We've got our own dedicated YouTube channel, so please, if you'd like to view any, please ensure that you visit our FBAA YouTube channel. Well, from us to you, we wish you well. Please stay safe and stay well, and we'll see you all soon. Thank you.